Hello, founders. Welcome to Startups.com. We are live, coming to you every Tuesday, Wednesday, and Thursday. Tuesdays, we do pitch decks with Will Schroeder. Wednesdays, we do everything to do with traction hacking, getting customers, generating revenue, all that good stuff. Today, I'm super excited. We got something special planned for you. We're going to do a little bit of a challenge for Ryan, my co-host
Oh,
here.
goody.
Chief Marketing Officer for Startups.com, multi-time founder. We're ranking the fastest ways to get traction for investors because
Okay.
Ryan, most of the founders that come to us, Startups.com, they are fundraising in some way or another. And we always talk about, hey, traction is going to help you with that. But we want to make sure that we're looking at the lens of, hey, let's get you traction, but keeping in mind the objectives of the members that are here. Want to share with everybody out there that we're going to be ranking these, and I'm going to be challenging Ryan. I'm going to be giving him some tactics. We're going to be talking about some concepts, some topics, and then Ryan is going to rank them. He has not seen any of these. He's coming in blind, so he's going to have
I'm
to
already
rank
just
them.
confused by the rating scale because it starts with S and ends with F. I
S
don't know what to do
tier.
here, Ed.
That's what we're all about in the internet land. All for the memes. S tier. Everyone, this continuing our pitch competition here. You can receive $5,000 advisory and investor relations package, and it is selected by our committee. So Ryan is part of that. Looking at the go-to-market strategies, we talk about it a lot here on our Wednesday show, and that's going to have to do with your idea deck, team, and then almighty traction. So we're
Woo.
here for. Notify us if you want to apply. You just have to participate in regular life there. And so make sure everyone use the Q&A box or the chat to ask questions. If you're watching this in the YouTubes, like, comment, subscribe. Really helps us out. Let us know. Ryan, I'm going to just start off with the general question to get everybody going. And we're taking for granted, and we repeat this. We're like broken records, Ryan, here. Just to reiterate, why is traction important for investors, especially at an early stage?
Because it's the only thing we have to go on that shows that you've got more than an idea in hand, right? It's that, yes, you've got a great idea, but you also know how to go and execute and get things done. Without traction, you're selling the promise of what might be. With traction, you're showing, here's how we grow what we've already accomplished. Way easier to sell that story.
But Ryan, founders will say all the time, but I thought that's why I'm going to get investors, because I've got an idea. Maybe I've built something, but to get traction, I need the funding. But now you're telling me investors saying to get funding, I need traction. Explain
Yeah.
what's going on there.
Yeah, look, it's a misconception. The misconception is that, like, I have an idea and people fund ideas, and then I go and I figure out if it works, and then it starts to grow, and then all this stuff happens. It's just not the way it works. I also want everybody to remember, until about 20 years ago, this is the way we always built businesses. We just went and had an idea, found a problem that people had, and made something, a thing, a service, a product, or whatever, and then sold it to them, right? We didn't have I'm not even going to call it the luxury. We didn't have the option of going and getting somebody else's money at scale, the scale that we see now, to do this. But I think it is important. If you look at the companies that get funded, and particularly now, right? We go through periods where checkbooks are looser or tighter. We're in a time now where checkbooks without traction are non-existent, right? They don't have to. They don't have to. It's also gotten easier to get traction and to show traction than it ever has been before. And so why wouldn't you? For your own sake, as well as the people you're trying to convince to hand over their money.
Right. In combination, it's so much easier to build now with vibe coding, those AI agents out there. Back in the day, this is dating us, but we came up through .com 1.0. It was so difficult to actually program something that you did need funding. And so you sold on the idea, you pitched on napkins. And if you just had an idea and you say, I can build it, just give me some money, that happened. And then we went through this other phase where it was like, okay, now we want you to at least build something and show us that you can build something.
Yep.
And then I'll give you money to go out and monetize it. Now, Ryan, it's like, no. You have to have built something and you're actually monetizing it because it's gotten so much easier. The goalposts have moved.
Yeah, 100%. I mean, the playing field changed. And so because it became faster, easier, cheaper to build, the expectation is you're going to go do that. Why wouldn't that be the expectation? It's logical. Investors don't want to put money into something. Like, also, why would they want to give you a bunch of money to build something if it doesn't cost a bunch of money to build something? What are you saying you're going to do with money? No, we would just like to waste some of your money up front, sir, ma'am. And so if you wouldn't mind just writing the check, we're going to go do this in the way that we did it 10 years ago and just hire a whole team of engineers, and then we'll guess at what we're building. Like, why? Why would you do this? You don't need to. Don't do it. It's bad
Okay,
for you.
we're not taking anything for granted, everyone. You heard the reason traction is so important, especially relevant today. We're recording this mid 2025. Ryan, where has the year gone? The days are long, but the years are short, my friend.
Wait, did you say mid 2025?
Yeah, mid
Where did the
2025.
decade go, Ed? You said
My second child, my youngest, the baby in my family, just finished grade 11, will be going into grade 12, thinking about university. It's insane, Ryan.
that doesn't make sense to me. I can't do the math doesn't work for me.
I know
Math doesn't work.
we're in strange lands. Okay, so here we are, tier list. So here's what's gonna happen. I'm gonna lay out, and there's so many tactics, there's so many ways to go with this, but I'm just putting the general ones out. Ryan, I'm gonna get you to rank it. Tell us why, and then let's go through some examples. Like, let's say we're building a B2B SaaS or something like that, and just kind of, spark the imagination. And then we're going to have a round for you to throw in some of your own ideas, and we'll rank them as well. And let's just compare how you and I would rank each one of these. Okay, ready? All right.
Yep.
So the first one is founder-led sales to your warm network.
To your warm network. And we're saying this is agnostic of startup type. This is just,
we want to do big buckets. And remember, this is to get traction to show investors.
Okay. And we'll be able to re-rank these later.
We can if you want to do it, but we want to try and nail it right now, or you can add some more of your own later.
Well, it depends on if you give me awful choices after this, then they all go below that one. If you give me great choice, so look, founder-led sales is always going to come near the top of the stack for me. It's important for so many reasons beyond just the traction. It's what will likely allow you to be successful in a lot of the other channels because you're going to take away a lot. Let's throw it in at A level now, and we may have to kick it up to S.
Okay, sounds good. Okay, why?
Because at the beginning, we have an unfair advantage as founders because we're the only ones who truly know the product. We're the only one that can sell on passion in the same way, right? We're the ones who understand the audience the best. We've had the conversations. If we're talking about our warm network as well, these are also people who want to support us. So you don't necessarily just want to sell to them only. Right? We may want to use the warm network to reach out into second and third degree connections so that we can see what happens when we talk to strangers. But from an early adoption standpoint, from an early traction standpoint, this is often going to be one of the fastest moving channels because you're more likely to get a yes here than anywhere else. Said differently, if you can't get yeses from these people, ruh-roh.
Yes, that is, I was just going to say, the investor will know you are a founder, at least willing to go out and do your own sales. And that leads to the next question, Ryan. I see these comments all the time. It's like, I built this product. Now, how do I get my first customers? And they don't even consider founder-led sales. Why do founders do this, Ryan?
Well, in some cases, I think they're embarrassed to go out and do it. They'd rather talk to a total stranger than have a friend look down their nose at them or tell them their baby's ugly, which is hugely problematic, right? When we've got our investor hats on, Ed, if I hear somebody tell me like, well, okay, so what's your warm network say about this? Like, I haven't really shown them yet. We're like, okay, you're too embarrassed to show this thing to your friends, but you want me to write a check to you? Right. Giant red flag for me. Every single time.
Okay. And Ryan, would you say that every founder does have a certain degree of warm network? Some people say, I don't know anybody. Does that qualify as either a justification or an excuse in your mind?
That's another giant red flag. If you don't know anybody in this space, if you haven't, even in the course of building this up to the point where you're ready to now try to raise funds against it, and you're telling me you don't know anybody you can go talk to, what are we doing here?
Right. Okay.
How did we get here? Right.
Totally makes sense.
It may sound harsh, but that's the reality. If you are at a point where you're asking other people for money and you haven't built even a small network of people that you feel like you can go out and talk to, or you're in a space that's so different from anything you know in the past, and you haven't brought anybody else in who can attach you to those, whether that's a mentor, advisor, partner, co-founder, employee, somebody, how are we going to learn? If we don't know anybody we can talk to on the customer side, how do we have any idea what we're building?
So true. So true. Okay. So Ryan, let's break this down and let's just do a quick exercise. So super quick, let's break it up in a B2B, B2C. I know there are multiple subcategories, but if you have to do a quick playbook to go out and do founder-led sales to your warm network and divide it between B2B, B2C, what would you tell the founders? And knowing that they'll go research, and we got other videos to back it up.
Sure. Well, I mean, you're going to start with who the audience is, right? So depending on what your B2B is or what your B2C is, the first thing you're going to do is start with the people who are most likely to be connected. So you're going to go through the exact same exercise, regardless whether it's B2B or B2C. You're going to comb through your contacts. You're going to think about everybody that you know who is in the space or knows somebody in the space or suffers from this particular problem that you've got. And you're just going to start there. The outreach, whether it's B2B or B2C, may be a little bit different. Obviously, when we look at this from a B2B perspective, typically the bite sizes are going to be larger. And so we can put a little more effort into the outreach and so forth. With B2C, we might say, look, I can't be doing founder-led sales for a $12 product. Well, my answer would be, you're right, not for long, but you can still start there, right? Because again, if you can't sell a $12 product to somebody that you know at a consumer level, what are the chances you're going to sell it to a total stranger? Right. So again, we want to go through and we want to utilize whatever tools we have. And there are so many tools now to help us with some of this stuff. I've gotten some pushback on this when I've suggested this in the past and recently, which is like, you can enrich your personal contacts. And everybody was like, what? That feels so dirty. That feels so weird. I'm going to take my Gmail contacts. I'm going to empty my phone out and I'm going to enrich them to find out like who fits these things. I'm going to do background research on my friends. I'm like, how is that different than doing it for somebody you don't know?
Right. And let's say you're making that contact, and just for the sake of this exercise, what does that look like? What does that conversation look like right away?
So it will depend a little bit. As you know, I'm a huge believer in doing customer interviews. I love the mom test as an entire process. So let's assume that we are past all of that phase. We've already done those calls.
Sure.
We've already done the customer interviews. At this point, if these are personal connections, these are warm, first-degree personal connections, we are reaching out with a little bit of excitement and a strong reason why. And I think this is where people get this wrong. They don't take the extra step of connecting it and using the context they have about this individual to say why they're reaching out. It's, I'm starting a thing. We happen to know each other. You want to figure out why it's important to you? No. I'm starting a thing. I know this about you. Because I know this about you, I reached out because I think you'll benefit in this way. Be specific. Go over the top. Do the investigative journalism. Do the research and make a really strong case. I always advocate for this in any channel you're starting. Go as far as you can. Put in as much effort as you can, because you can always dial it down. If you start seeing really great results, you can keep backing it off and doing less and less and less until you stop getting great results. If you start with the minimum, one thing, you probably won't get results. Two, if you've already emailed your entire friend list with crap messaging, how excited are they going to be to get the second, the third, and the fourth, and the fifth one when you try to dial it up? Start heavy-handed, start super focused, and then work your way back. And I generally don't see people do this. They'll be like, okay, I exported my contacts list. I sent out a mass email and nobody loves me. Yeah, of course not.
True. Everyone, we have an entire series on our YouTube channel about founder-led sales, and Ryan educated all of us. So I just want to give you a little preview, but we're ranking founder-led sales in A tier for now. Let's move on to the next one. Ryan, generally speaking, remember, early stage, and it may sound counterintuitive to get investors, but paid. Anything paid, where would you rank that?
It's going to be up there because we have a lot of control over it. Right. We can control the pace. We can control the timing. We can control the reach. Unlike organic, where we are at the mercy of the algorithms and the mercy of the market, we can force outcomes with paid. Does it mean it's our go-to market channel? Not necessarily. If we're talking purely traction, in order to be able to demonstrate people like what we're laying down, they react in the ways we expect. Yeah, maybe it's horrifically expensive right now, but we'll get better at it. We'll get more efficient. But what we're showing you, Mr. and Mrs. Investor, is that people do react. They do want what we're offering. And there are very few ways to do this faster than paid.
Okay, you've told me the why. Where would you rank it?
Trying to guess ahead what else you're going to surprise me with. What's the exercise here? Best traction channels, fastest traction channels. What's the outcome here?
Well, for investors, and we're being vague on purpose because there's so many different ways to go about it. This list is pretty forgiving, so just throw it somewhere.
Let's keep it at a B for now then.
Okay. And I just want to point this out here for everyone. What Ryan said, it's something he taught me, because normally I would say never pay for traction in the beginning because investors don't want to see their money potentially go in a sinkhole if you haven't figured it out. But Ryan has taught me a lot in terms of, hey, it actually might be the fastest way for you to figure out where to go in the beginning. And that's why it may seem counterintuitive. And Ryan, so many founders automatically default to things that either they spend way too much money on paid in the beginning, they think that's the only way, or they don't spend any money on it. And they go, how come it's going so slow? Because I'm trying all these other things. So I love the way that you talked about it. So give us a few pro tips on how we even consider approaching this whole paid methodology.
Yep. So again, if we're talking from a pure marketing perspective, paid is great because it allows us to short circuit the process of understanding whether traffic of that sort has value to us.
Nice.
At a traction level, it has the additional benefit of being faster. So if we need to go and show investors in the next 90 days, SEO is not going to get us there, right? Organic social is likely not to get us there, right? A lot of things aren't going to have that same level of control or repeatability. And so one of the things that an investor will love about this, regardless of the cost, regardless of whether we use this to go to market, is the learnings we can take away, the very, very objective data that we achieve from this. If you compare it to something like an influencer, it's like, okay, now how do you repeat that exactly? Well, I don't know. I have to find another influencer exactly like them. Well, how many are there exactly like them? Well, exactly zero exactly like them, right? So when we start to contrast that against other options where we can show with some some level of certainty, how we drove the outcome, how we can continue to drive it. Paid is going to be one of the best for that. The other thing I love about it is it can then set the stage for the conversation that tells you about what you're going to go do next. Even if you haven't achieved that next level of traction, as an investor, I love hearing things like, look, we ran $2,000 worth of paid experimentation. Here's what we figured out from a CAC standpoint. Here's what we figured out from an audience standpoint. We now know we can ignore these people. These are going to be our best buyers. Here's what it's costing us right now. And by the way, what we've learned here from messaging is now we're going to be able to go over to organic channels, utilize this stuff, and it's going to accelerate our growth there 10x because we don't have to learn on the organic channel. We just have to deploy on the organic channel.
Perfect. That's the way to approach it. I'll give you a personal story that I was just experimenting with. And once again, it's because they stole a page from your playbook, which I appreciate very much. But
that's why I published it.
Yeah, we're testing it. And I found out that I could buy a minimum entry point, $55 to get 280,000 impressions on ads on a specific network. So I went and I paid for 10 ads and I tested all the ads differently. And then I said, I'm going to double down. And I ran 2 of them again to see if I could repeat the results. So all in all, this test cost me around $600, and I was ready to do that. But here's the interesting thing, Ryan. After I got them to the product, my conversions from there for people to take the next step, like favorite, contact me, sign up for this next step, were basically nil. So I was able to quickly find out I could drive people and how to drive them, but my product just wasn't getting the traction. There was an issue at that particular step.
Yes.
Instead of being in this ambiguous land where I don't know what's going on. I don't know how to do it. And that's the advantage of paying for your test up front.
And think about all the other learnings that you took away from that, because I would find it hard to believe if you've ran 10 test ads with that many hundreds of thousands of impressions that you didn't learn something about what messaging works, what doesn't, what CTAs are more powerful than others, what imagery do they like, right? So now all of a sudden, you've got this whole bank of learnings. In addition to, we now know how to drive traffic. In addition to, we now know that there's some problems with our conversion funnel. At $600.
Oh, total steal.
Imagine how long it would have taken to achieve the same results with something purely organic.
Yes. The fact
Months,
that I'm...
years.
Yeah. Oh, yeah. And I could have false positives going down the wrong rabbit trail.
Yep.
And we just established that we're both getting old, so I don't have time to waste on this.
We don't have time for this shit. I don't have time for organic. I will be dirt before we get there, right? So look, it's an important factor to consider, right? I think the speed with which we can do this is really important. People get caught up in the cost, but I will always tell people cost is relative, right? It's relative to the outcome. All right. So free can be really expensive if we don't get any results. Free can be really, because nothing's free anyways. There's at least time applied. Even if you're not putting active time into it, if you're just sitting around waiting for something to happen, that's lost time as well. And we both know that time is money. Ergo, sometimes throwing a little cash behind it to move things along faster works out well. All right.
I love it.
Number 3, let's go.
Next one. Let's go to the other end of the spectrum. Social media / content, because they typically go hand in hand. I know they're distinct. Where would you rank that?
Early stage?
Yep.
Well, this is where it's such a broad bucket.
Yeah.
I'm going to go ahead. I'm going to throw it in C. I'm getting nervous now that we're not going to end up with a super here, but I'm going to go ahead and throw it in C, but I might take a slightly different angle at it. We'll get there in a second.
Yeah. Okay. Why?
Social media gives us an ability to observe our customer base, right? We get to see what they're doing out there. The content side of social media tells us what the heck they're interested in. What are they engaging with? What are they not engaging with, right? So when we see people that have really good success with one type of content and not another, it tells us a lot about our target audience. So one of the most powerful things about social media at the earliest stage isn't your own social media. It's everybody else's.
Oh, right? Good point.
Everybody else's. I have done more to convince investors by showing them what's happening on high performing social media accounts at an early stage than I've ever been able to do with my own or a startup's.
That's really good, Ryan.
It tells the story and you can't question it because it's public, right? You could question the insight, but it's all out there. We can see exactly what's happening. We can use that as signaling and show that there's traction, at least around a concept, an idea. There's appetite for a thing, and there's a disdain for something else. This is how we go out and we're able to show, again, conversation at scale that we can tap into. But because we can lump parts of social into paid, right? We can lump parts of social into founder-led sales, because a lot of the outreach I do as founder-led sales is through social media. So I think we have to separate it from the channel level and sort of the tactic we're using. But if we're talking about social media in the broader sense and how social media is intended to be kind of used and abused, it is about those interactions. And we can take advantage of interactions, whether they are ours or not, right? Either directly or indirectly. So indirectly, using it as evidence to show the stories that are being told. Directly, I can go in. I don't have to have a post that has 15,000 comments on it as long as somebody else does, because I can see all those comments. I can go talk to all those people. I can jump in and borrow all of that momentum.
Everyone, you need to bookmark or transcribe or put that note because I didn't even think about that. That's fantastic. Now, Ryan, let me give you a little bit of my contrarian take and we can deviate a little bit.
Okay.
I put social media / content in S tier, but only for one reason. If you're doing social media content after the fact, after you have your solution, you're trying to shoehorn it out there, I would agree with a lot of things that you said. It's super slow in trying to build that. But I use social media and content before I have the product, and I build the channel and the audience first, and then I fine tune the product there. And that's when I think it's S tier. What do you think about that?
I think it would depend a little bit on the product, but I think largely I agree. I think I've been operating under the assumption that we're kind of past like the research phase. We have the product, it's validated. We've done the mom test. Like it's at that stage. And look, the danger to me, if I understood what you said correctly, is that if we're doing all of that at the earliest stage, we start that really, really early. Are we using that to validate the idea? Because if we are, my concern is because again, like social media can be really slow. It can take lots of time. So if we're trying to build our own presence to validate something, what happens is we have to take all that time to build that presence. If it validates and we're right, yay. If it doesn't, oh man, we just spent lots of time building content, making relationships, building a network that we can't leverage now. So again, if we're under the assumption that we've already done some of that base layer validation, and look, part of that can be done through social media, and you can be building your social networks, you can be building your following, you can be building your content base, and of course it helps like crazy, because if all of a sudden people are like, this looks interesting, this looks cool, how long has he been? He's never done this before, he's never talked about this before. The hygiene, social media can become a really strong hygiene factor, meaning that people are going to go and look at it to see like, okay, does Ryan actually do any of the things that he talks about? Has he ever done or experienced any of the things he's telling me he can do for me? And if the answer is no, big pause factor from a purely like business growth standpoint, I think it's a great thing to have. It's an asset that you will rarely regret because you can always pivot. You can always change your product. If you've built a big audience, you can always find the problems in it. Because, I'm a big fan of saying, definitely do not fall in love with your solution or your product. Do not. I don't even like you to fall in love with the problem. I like you to fall in love with the people that you want to solve it for.
Great advice.
That never changes, right? That never changes. So if you got that audience and you can cultivate them over time, even if your first product, second product, fourth product, 10th product doesn't validate, if you stay in there and you really feel like you want to help these folks, you'll find something. We're talking about traction for investors.
Right.
While, again, I believe that investors will love this traction, it just takes so long to achieve, in my opinion. That's the only reason I wouldn't throw it up in the S tier is that I feel like it's going to take us such a long time to build. And those platforms can be pretty fickle too, right? Imagine all the people that we're building on TikTok and preparing like, I'm going to get my big following and then I'm going to go talk to investors. And then a year ago when they're like, yeah, we're pulling that. Like, uh-oh.
Yeah,
right.
Totally.
Now, ultimately, there have been some solutions and so forth, but like you are building on rented land a little bit there.
You are. This is the reason we have conversations like this, everyone, because, me going back and forth, it depends on the founder, one.
Yep.
And the context is so important, depends on the product. Ryan is going to share different sides of it and the nuances that I'm not going to share. And that's what we want for all of you. One size does not fit all. There's no silver bullet.
No definitive answers.
Listen to the entire conversation holistically. I love conversations like this because we're not a one-trick pony here, right?
No. And Ed, your answer is going to be absolutely right for some people. It's going to be absolutely wrong for others. That's why we're here to hash it out. Within that context, they can determine what makes sense for them.
Next, Ryan, I bring this up because it's so common. I see this.
Billboards.
Not quite. We've talked about this before, and I like your take on it, so I wanted to give it more love, trying to spotlight. But the next one is waiting lists.
F.
I love it. That's hilarious. Okay, why? Let's put in the F category. Why? Because some founders are going to be like, wait, what? Everybody tells us to create a waiting list, pre-sell it in that way, like just get email signups, everything. So walk us through it.
If you can't do any other damn thing, do a waiting list. But if a waiting list is just a way to capture an email address, find some better reason for people to give you because what you're saying is like, I would like you to give me information. I'd like you to come with me right now to do, Ryan, to wait. Like, Who is going to get excited about that? Now people say, oh, well, you can build FOMO and you can build this and you can build urgency. And I was like, that's worked a couple times, right? Like Instagram did a fantastic job of kind of the gated entry waiting list where they were only letting so many people into the platform, right? That doesn't work most of the time. Most of the time, a waiting list is somewhere what was a warm contact goes to die.
Right.
Right. So if you're going to create a waiting list, if you want to think of it as a waiting list, which is like, I can't sell my product right now and I need somewhere to put people, great. Don't tell them they're joining a waiting list. It's like, who would like to line up to queue with me? I mean, everybody other than the British just said no, right? The British were like, oh, I'd love to. We love our queuing. It's amazing fun and we're great at it. And they're fantastic at it. No better queuers in the world than the British. But nobody really, really, really wants to wait. And so instead of waiting, let's have a conversation with our audience. Let's build audience, not a wait list. Okay.
Yep.
And so, because what we don't want is just people sitting somewhere waiting to hear from us again, because guess what? That's not actually a thing, really. It's you've now had 2 touch points with them. Okay. But the last touch point was sign up and wait. And now I'm telling you something important. So what was the difference exactly between that and just waiting until you actually had something important to tell them?
Right.
Nothing.
And so many founders fall into this trap, and investors are wise to it because founders say, oh, I've totally got traction. I have like 1,000 people on my waiting list that started 5 years ago. And investors are like, I know that's worthless. So let's not fall into that scenario where you're battling with investor perception because all you did was create a waiting list that's really not worth anything.
It opens you up for an absolute ninja kick to the neck meat too. Because here's what I will always ask. When was the last time you emailed the wait list and what was the open rate and response rate?
Yep.
Right. It goes crazy. And then just like every time founders just like deer in headlights. Now, if the answer was, oh yeah, we email them weekly and we have about a 46% open rate and we get a response rate of this or click-through rate of that, then I go, awesome. Stop calling that a wait list because they're not waiting. Right?
Yep.
It's your mailing list. It's your newsletter list. It's your community. It's whatever. We have so many ways that we can engage with our audience before they become our customers. Stop treating them like future customers and start treating them like the people they are now who experience the problems that you want to solve and love on them a bit. Do something with them. Can we make another category can we make another S category, but it means something different? The shit category. I want to kick it down to that one.
Okay. So keep this in mind. Maybe we have to reorganize this list, but Ryan, you're delivering just as expected. Okay, next
that one will stay at the bottom. That one's there, unless you were like, I don't know, selling through Avon parties. I'm not moving waiting lists up.
You just dated yourself again, Ryan. Just letting you know. Okay, you might as well say
I'm trying. I relate to my audience, Ed, and you're the only person I can see right now. So I'm trying to make jokes I know you will get.
Oh man, so much fun. Okay, next, Ryan, we're going in the other way. Cold outreach.
Easy.
Easy. D. Okay.
Here's why. We should only do cold outreach if we have no way to reach people in any other way. If we can't warm them up at all, which in 2025 would be very, very, very few people, right? If you can derive somebody's email address, but you can't derive their social or some other place they hang out, I'd be really surprised. We normally start with the other and move towards email. A mistake that I see founders make all the time is they're like, okay, we found these folks on social. Now we're going to scrape their email addresses and we're going to punch them in the face with an email they don't want to get. Z for zero. Thank you. Thank you, John.
We'll get that in there.
Z for zero.
Yep.
Yeah. So look, cold is one of those last resort kind of things.
Right.
Cold is when we don't have any other way of reaching a person, which again, I'm going to say is going to be very, very unlikely, very, very rare. I just see so many bad practices associated with it too. Like people out there buying lists and then spamming people, right? Oh. The only cold approaches I've ever seen that I really liked where it was at least, I still won't even call it cold. Cold to me implies that we really don't know anything about this person. We're just doing cold outreach. They don't know anything about us. The only cold approaches I've ever really liked were the ones where there was at least some context that we could utilize in that cold outreach that showed that we had done something to understand them.
Sure.
Something specific.
Yeah.
Right. Not like you and I are about to start getting the AARP mail. Oh, well, you won't. It's the American Association of Retired Persons, right? They start sending this out when you turn 50.
Oh,
and
man.
So, yeah. Will got his this year, apparently. And so like that's a shared context. So is that cold? No, but yeah, it is, right? It's a shared context. I want specific context. I would only resort to cold if there was just no other way. I just cannot reach these people in either way, which again, I would really call into question when, why, or how you wouldn't. To me, cold is a lazy shortcut in most cases. It's saying like, I'm just going to make it up with volume. I'm just going to smash people. And it's great. It's great traction to show because like, these are people that I don't know and they don't even know me and they're still saying yes. Yeah. Like, what is that? Even a broken clock is right twice a day. I
True.
don't want to be a broken clock with my marketing.
I can say beyond a shadow of a doubt, Ryan, just to affirm what you're saying, I think over the past year, I've responded maybe to less than 1% of people who reach out to me cold, even after they've researched me and they say something contextual. It has to be at the exact right moment where I'm
Yep.
struggling with a pain point and it happens to be top of consciousness, then I'll respond. But there has been times where, like I said, like you said, if they do research, but you are rolling the dice and yeah, volume's got to make up for it. It's brutal. Now, let me just say this, right? And invite your comment on this. But to all the other founders out there, I don't want you to mix up cold outreach to investors with cold outreach for traction with customers. Here's why. Because investors want the deal flow. They want cold outreach, especially if they're a big firm. They want strangers to approach them with a really great idea. They're just waiting
Yeah.
for you to come. So they're set up for intake of
100%.
cold contacts. But no customer wakes up in the morning and says, gee, I can't wait to have all this cold outreach hit my inbox today.
Right.
It doesn't happen. And that's the distinction.
No, it's one is solicited, one is unsolicited, right? The investors are literally saying, here's my email, here's our submission portal, here's our associate, here's where you like they have ways for us to do this, right? They are inviting that. That's not cold, that's an invitation, right? It's an anonymous invitation, but it's an invitation. On the other side, it just so there's a couple things. So I get people that rail against me on this one all the time. Rarely do they have the success that backs up their position. They're just like they want it to work and they want me to be wrong. I want to be wrong too. So anytime I'm telling you not to do something, it's simply because I believe there's a better way for you to do it. It doesn't mean I don't want you to succeed. I want you to, if cold could work for you, fantastic. But if a little bit of warm up and then outreach would work better for you, I want you to do that. Right. So this is the way I look at it. Again, we got the investor hat on and I do, it's my North Face investor hat. I'm not wearing my Patagonia vest. It's not that.
Your fleece.
So, got the investor hat on. I look at that and I go, okay, I'm going to ask a question, right? I'm going to ask like, okay, so what's the response rate? What's the meeting rate? What's the close rate? And regardless of what their answers are, here's the thing. Even if your numbers are relatively good relative to somebody else is doing cold and having lower results, I'm not going to compare it to that. I'm going to compare it to what I think you would have done had it been warm. Because your point, when we know nothing about these people, they know nothing about us, the response rate is always going to be lower, right? Unless they know you're not good.
Right.
Like, if you have a reputation that precedes you and you're garbage, then maybe cold would be good. Be like, only talk to people who've never heard of you before. Cool. Otherwise, I'm going to look at it as lost opportunities. I remember having somebody go like, yeah, we figured out a way to send we can send up to 1 million emails a month and we are buying lists left and right. I was like, okay, cool. How well is it working? We got our first 15 sales. Like, you sent 1 million emails. No, we sent to 1 million people. You sent more than 1 million emails. And you got 15 sales. Yeah. As an investor, I look at that and I go, how many of those people will never want to work with us or never listen to us? Are we burning potential leads and contacts? Are we sullying a reputation? So even if it works in the short term, one of my concerns is always going to be, what is the impact in the long run? And if I see founders, and if you're out there and you're listening to this and you're like, well, we're doing cold and it's working okay, answer me this one. Are you using your core domain to do this? If so, stop now. Stop listening to Ed and I. Nothing you can do is more important than this. Go hit stop on Instantly or whatever the heck you're using Apollo to send this stuff and go warm up some other domains. If you're going to do this, do not destroy your core domain with cold email. It will happen. It will happen.
Perfect reason to put it into the D. And this is coming from experience, everyone. It's just not theory.
I've made these mistakes.
Yeah. Okay.
More than once.
So here's the last one, Ryan.
And do you know, I've been trying to psych you out this entire time, Ed. I assumed from the beginning you would save the best for last.
I'm not.
Damn it.
And I know for a fact, but I'm going to give you an opportunity to reorder it.
I will.
Okay,
I'm going to tell it to you. Somewhere.
I'm going to tell it to you, and then you can bump something up to S tier if you want, right? So let's work it out. The last one, because this is common. I'm bringing up all the common ones that I see founders struggle with. The last one is hire/outsource.
Okay. Wow. Trying to give waiting lists a run for its money. Exactly. Okay. Yeah. Just go ahead and shove that one in between D and F. And just bump everything above cold outreach up. Just bump cold outreach and everything else up, and then we're there.
Okay, so it's not going in S tier. So what I'm gonna do? So you think that if I reordered everything like this, then that is actually what you would finalize as your list?
I'd go founder-led sales, paid, social media, and then basically the way I'm looking at this is there's 3 things I would do. There's 3 things I wouldn't.
Is
the way this list breaks down.
Higher outsource higher than waiting lists, or is waiting lists higher?
Waiting list is more of a symptom because you can't just have a waiting list, right? You have to
Sure,
drive traffic to it in the first place.
sure.
And so it's sort of like there would have been something else. Like we might have hired somebody to make a wait list for us.
Right, right, right.
Please no. Or did cold outreach to tell people that we'll talk to them later. So I'm going to leave waiting list down where it is just because I find it to be, regardless of how you achieved it, it's sort of a wet blanket for me.
Now there is an outside argument, Ryan, just to stretch this a little bit.
Yeah.
I've seen founders hire or outsource somebody and they end up becoming like a co-founder, or it's like the best relationship ever. Outside chance, but I have seen that happen.
It's kind of like your first social media post going viral and you becoming famous overnight. It does happen.
Yeah,
it's
sure.
just I'm not gonna write checks against it. I'm not gonna write checks against it, right? And so, like, again, if that's happened, then cool. But if we're trying to pick which traction channels we need to utilize to drive the best results so that we're most likely, so that's what the calculus is going on in my head isn't just about the effectiveness of the channel, right? It's as a whole, it's the probability that it happens in the time frame we need it to happen for traction for investment.
Okay. So with that, what would you add to this list? Just we've stretched it there about probably a dozen other things that we could just add in there just in this conversation. What would you add to this list?
I don't need to add anything to this list unless we had something way more specific. We got a scenario or a particular type of startup. Look, what I would probably do is nuance these a little bit more.
Okay.
Like I would have founder-led sales at the very, very top because we're going to want to have seen that done no matter what. As an investor, I want to see that you've done this because it tells me that you understand things that you would not otherwise understand if you hadn't done it. I need you to know those things. Okay.
Yeah.
So that one's up there for more. It checks more boxes than just traction for me. Okay. Then what I would probably do is say like, okay, well, let's break paid out into like paid search, display ads, retargeting. Like there's a bunch of other things we can be doing here, but that's going to be based on the calculus, like the total package, right? It's going to be, we need to sort of know what's everything that we're doing. I want to go back to hiring and outsourcing for just a second though.
Okay. And then after that, I do a quick exercise. I got 2 to throw by you.
You got 2 to throw in? Okay.
Yeah.
All right. So here's what I want to say about hiring and outsourcing. Absolutely do hire channel level experts. But to me, hiring and outsourcing, it depends on what we're talking about. But like, you don't just hire and outsource traction, if that's what we're talking about, because I think that's what we're talking about. Like we're just going to get a growth firm as a whole at the early stages.
Right.
If you have not already achieved some level of early traction and success, this is an extremely difficult bet. Also, they're expensive, right?
Totally.
They're a very expensive proposition. So if you are the founder who's saying, why do I need traction? Because I need money to go get traction. You probably can't afford an agency that would actually deliver results. There's some fantastic growth agencies out there, by the way. Yeah. Fantastic. We worked with a bunch of them. I know some of them personally. They're fantastic, but they're not cheap. And they're not where I would start for initial traction for investment. Okay. They would be the kind of things that I would talk about engaging to improve things after the fact, right? We've proven out these channels. You're not experts in any of them, but we've made them work despite that, which should give you, Mr. and Mrs. Investor, really warm, fuzzy feelings, because if an idiot like me can do it, then when we hire an absolute expert, rock star in the space, they'll scale even further. But we figured out to make it work at a basic level, we're going to dial up and optimize. We talked about this last week, Ed, which is that should be the assumption, right? When we're thinking about, when an investor's looking at what we're doing, when they see success, they should assume this is the least efficient, least effective it's ever going to be, because we're just figuring it out for the first time. It will only continue to get better from this point forward.
The only time that in the early stages that I hire an outsource is I want to talk to a subject matter expert, you call them a channel expert, to learn how to do it. So if I need to figure this out, I will find the top 10 people and say, can I pay for an hour or a day of your time? And I will learn as much as I can and then try to go do it out myself. I think that's worth the investment because it does accelerate what I've learned. And I tell investors, and they love that story as well, that I talk to all the experts in the field.
Yep. So I think seeking expert advice is always good, right? I would definitely question if a founder's just like, well, I just pushed go, right? I watched a 15-minute YouTube video on how to run Facebook ads in 2025 and off we went, right? You want to understand. And again, this is part of that traction story, is how we decided on the channel in the first place,
right?
What we did to explore its efficacy, the original experiments that we ran. What did we learn? What did we change? How are we doing now as a result of that? You could even go a step further. I have no problems with a founder hiring a channel expert and working alongside them, right? A done with you approach, totally cool with that.
Nice.
It's when we are like, we found an agency who will run our Facebook ads for $2,000 a month. How much are you spending on Facebook ads? $1,000 a month. Wait, you're paying somebody $2,000 a month to run. This is where it becomes a problem. Like you end up so lopsided, top heavy. Or if you do right size that equation, you're paying somebody $250 to run your ads. What are you actually getting? Right. I would argue a founder who has no idea what they're doing is going to produce slightly better results than somebody who does know what they're doing, but doesn't understand the business at all and isn't getting paid enough to ever want to develop that context.
Right. And I think founders can take comfort. We only bring in the service providers, those experts, to do it with you, alongside you, teach you how to do it. We don't allow agencies just to come in and say, hey, I want to pilfer all your members to become my clients. We want to build that community. And so if you meet someone here at Startups.com that can help you with that, we definitely have vetted them and we want to work with them. All right.
Yeah. That to me, that's founder engagement, and it's going to end well, right? Because there's that common context. All right. What are these two surprise channels, Ed?
Two surprise channels. So I'm going to give them to you both, and let's give it just 5 minutes. So the first one is offline. So anything not digital, right? And then I forgot my last one, actually. Start with offline. I'll remember.
Let's start with offline and see if you come back online. All right. Yeah. So offline can be fantastic. Again, it depends on what we're doing, but it can work even for like small ticket stuff, right? We have a founder in the network right now building a physical consumable product, and the go-to-market channel that made the most sense for that individual are basically live events. It's they're going and they're selling the product at these events. Why? Yes. Because the event tracks their ICP specifically. They are already there. They don't have to pay separately to get these people. They physically show up. You don't have to fight the noise. You are there. You are seen. You can engage with the people, right? So it takes away a ton of the variability at the digital level, right? Where it's like, okay, well, we don't know exactly what words. When I can go, hey, you in the blue hat, the guy in the blue hat goes, yeah, you, right? So it shortcuts the process of being able to make contact. Then we can quickly sort out. Go ahead.
I want to clarify. What you're talking about is finding offline channels where you don't have all the noise of the digital that fit an ICP. We're not saying go buy a billboard or go, get a, if that happens to be contextual, just don't go buy a billboard for billboard's sake. Make sure it lines up.
Yeah. So we actually had another, and you'll know this founder, but this founder was selling to a population of people who specifically would use this device in crowded commutes. What better place to use billboard advertising? If we could, because you want to put it in the crowded commute zone anyways. Your ICP are people who are suffering from and living through crowded commutes. Fantastic, right? So in that case, it works. You got to go back to the alignment with the audience, right? If it's contextually aligned, great. I was talking more about like in-person events, pop-ups, anywhere where we can short circuit that process of getting, because digitally we're trying to get eyeballs, right? Physically, we're trying to get foot traffic and bodies. And when we have that, we have a much better sense for why they walked by or why they didn't. We have a much better sense for how they interact with all the content. And again, we take that in the same way that we talked about taking paid and all those learnings that you got from your $600 experiment, and then knowing that we can use that across a bunch of other channels because we now know the language, we now know the pushback, we know the objections, we know the reasons, we know the emotional hot buttons. Now we can take that and use it elsewhere. I would argue there's no better way to develop that context fast and with high fidelity than just real human-to-human interaction. When you can see the body language, see it all, it's so different.
Yes, Ryan, just this past weekend, I scanned a QR code on the back of a chair at an event. So the offline can get you online very quickly, but
yes,
I was a captive audience right there. I wasn't blasted by all this massive inbox and all this noise. The signal was plain and clear. Scan this QR code. So that's an example. I remember my last one, Ryan. Okay, so wait. Where would you rank the offline? Let's say offline events.
Because we're just talking to a general audience right now. If this was like offline events for extremely high ticket enterprise, blah, blah, right? Like it'd be up there, right? It'd be way up there.
Okay. So
because we're just talking to a general audience that could include everything from selling cookies to, selling enterprise SaaS solutions, I'm going to put it somewhere. I'm going to put it between B and C.
B and C? Okay. So I'm just going to...
I would not move it ahead of founder-led sales, paid, or social media at this point.
Okay. B and C. Okay. So while I organize this, the last one
But that's highly context dependent. Highly context dependent.
Sure. Context dependent. The last one is PR. And I bring this up because so many founders put in their pitch decks, we were featured in, this magazine and, et cetera, and they think they're going to raise funds. Let's talk about that. Where would you put PR?
Look, PR is just year by year, I think it's becoming less effective.
Yeah.
Because the traditional outlets where that stuff got published are becoming less effective. Less people are reading it. Less people are paying attention to it. Less people believe in it or have any faith in it. Here's what I would say. Like, if you're thinking about it as a traction channel, you've got to go back to something really core. Any PR person will tell you this. Is there a story there? Right? Well, yeah, we're launching our product. not a story. Nobody cares. Okay.
Especially for
Nobody
investors.
cares.
Yep.
Nobody cares. We're launching. Great. Right. So what? So if there's a really interesting story there, if there's an angle, if you have some deep personal connection to it, if you have done something extraordinary that makes you exactly the founder for this business, or if you've done something extraordinary that really helped someone. We had a founder, and you'll know this one very well as well. And I remember going back to him and saying, like, what he was doing, I don't want to get into details, but what he was doing wasn't all that like PR worthy in itself, but the outcomes that he created for some of his clients were absolutely PR worthy, because they were sad stories in a lot of cases.
Okay.
These people ended up needing his services, needing the solution that he had, because tragedy, lots of other things happened. And I said, you know what? You actually have a great story angle here. The story isn't the business you're building. The story is the people you're helping.
I remember this founder.
Yeah, I figured you would. So look, if you have something like that, if there's a strong story element to what you're building, then PR can work. I would say for every founder I see says they want to use PR, what they really mean is we want free publicity, but we have zero story to sell or tell.
Right.
Okay.
They're looking for
it has to be super compelling.
Just cheat code that
would you read your story?
Yeah.
Would you read the story? And most of the time it's like, no, probably not. Okay, cool. Then we can just skip PR for now.
And investors know that you can manufacture PR. It can be inflated. So I definitely rank it
We're
lower.
on all the news wires. Neat.
Yes.
You paid for a distribution. Who cares, right? Like, it doesn't matter.
Okay. So Ryan, looking at where would you put PR?
Again, because we're talking about the kind of, I'm aiming at the average here. So like generally speaking, it's going to be down there somewhere between C and D, probably.
D and D. Okay, I can put PR right.
Yeah, and again,
okay.
Hiring an outsource, I want to be careful here. I want to be really careful here, because again, like I would hire an outsource for some of these specific things, like getting someone to help inform, engage around paid, or depending on what your paid budget is, maybe even just run it. This is, again, it's so context dependent. But yeah, I'm gonna leave it down where it is for now. Yeah.
The fact of the matter is, Ryan, S tier, everyone start with founder-led sales. That's what we're going to do.
That's okay. That I always want to see that.
Ryan, this has been great. I'm going to leave a last word to you. Just want to say to our audience, hey, if you learned something, please share this out with everybody. Share this tier list. Share the conversation. Start your own. Leave a comment. Let us know what your tier list is yourself. Ryan, last 1 minute encouragement word for you.
1 minute of encouragement. Go get traction for the sake of building a great business, not simply because you want it to show off to investors, right? I want you to think about this in the calculus of what you're doing. What are the channels that are most likely to achieve success within your business, whether you raise funds or not? And is there a traction channel that you believe in so strongly that you can grow that you could just do away with the need to raise funds at all? You win, my friend. You win.
Couldn't have said it better myself. That was a mic drop moment, Ryan. Always a pleasure, Ryan. Good luck with your move.
It's on a boom arm, Ed. Just like I can't drop my mic. It's too hard to detach.
Proverbial, metaphorical dropping mics left, right, and center here at Startups.com. Ryan, I'll see you next time.
See you, buddy.